Hey there guys, thanks for tuning into this video. Look, I just wanted to provide a little bit of context around this interview with Tom to give you an idea of a little bit of an idea of who Tom actually is and why I really wanted to reach out to Tom to actually get this interview in the first place. So people that follow this channel for a while know that we've featured Tom a bunch of times on different videos. Tom's based in New York and he's head of the firm Fundstrat. Now, Tom's got a lot of experience in traditional markets. He's been around the finance space, I believe, most of his career, and has gotten into cryptocurrencies. So Tom is someone that I value tremendously in cryptocurrencies as a real thought leader. Anyone that's come from traditional finance and then moved into cryptocurrencies has a very unique perspective, and I believe that they're able to kind of see things that we can't. They're able to see trends, they're able to see patterns from these traditional markets where they have experience in and into cryptocurrencies. And anyone that has that kind of knowledge, to me, is kind of the top in terms of value and things that we can learn from. Because ultimately what we want to do with any kind of investment or anything we're even learning is we want to try and gain enough knowledge to look ahead in the future. It's about forward thinking and projecting where something might be long term. That's really what it's all about. So when we reached out to Tom, we reached out to him a few weeks ago and lined this interview up. And to be honest, I'm still can't believe that we managed to get it. Tom is someone that I highly respect, and for me, it was a real honour to sit down in front of the man and to actually be able to interview him. And you'll probably see I was pretty nervous, actually. I'm not an experienced interviewer. I'm not an experienced media person. So, flying out to Thailand for the conference where this was filmed a couple of weeks ago, sitting down and meeting with Tom and interviewing him was surreal, and still feels pretty surreal to this day. So you'll find in the questions that I asked Tom, I really try and structure them in a way to give as much knowledge and to extract as much knowledge from him as possible to help you guys and to help me as well, and to help anyone that actually watches the video. So that's a little bit of context around the video. Sorry if I waffled on. I just wanted to give you guys an idea of the background of the interview. I really hope you enjoy the video, and I'll leave you straight to it. Cheers. Tom, thanks so much for coming on the show. Really appreciate it.
Yeah, nice to meet you.
No, likewise. You are featured on our show quite frequently. Actually, we always use segments from CNBC on there.
Okay.
All the time.
Got it.
And we really like your take on the market. We really like your background as well. I think people from the traditional side are quite a rarity in the space, especially someone that's been in it for over 20 years, such as yourself.
Yeah.
So you're the managing director and head of research at Fundstrat Global Advisors. Your firm provides research and data for institutions, wealth advisors, pension funds, and high net worth individuals. What I'm interested to know is, how have you seen that clientele change over the past few years as the crypto ecosystem has matured?
Yes, I mean, our business was founded primarily as a macro research firm, so we're advising clients on equity, policy, technicals, and quantitative strategies. But as you mentioned, we've begun to do work on cryptocurrencies and digital assets because, one, I think it's going to be, obviously a very important growth area in the future. And over the past year, I think the receptiveness of our existing clients to cryptocurrencies has changed a lot. I think that they're more open to looking at that space. But I think at the moment, the majority of our traditional clients are mostly in a wait-and-see mode.
Mm-hmm. Now, you mentioned quantitative metrics and what you use to do your research. How big of a factor do you think the qualitative stuff is in the space at the moment? I mean, I know a lot of people like to look at the teams, they like to look at the company structures and things like that. I know I certainly do. How important do you think those factors are based on the current market's maturity?
Well, I think, again, I'm going to express an opinion because we don't know where things are, but I'd say this is such an early stage in the development of crypto that there are very few known winners versus losers, and because of that, I think it makes it difficult to use qualitative measures to really measure projects. So I think, for instance, what we found is the correlation, and we track 50 currencies, cross correlations, it's incredibly high, which means for the most part, the market trades with each other. They move in the same direction. But we've attempted to sort of provide some insight by sectorizing the market. So we have we track platforms separate from commodities, separate from privacy, and a few others. And we actually make that research available, free to download, so people can sort of look at how we're tracking the market. To me, the one project that I think has really stood the test of time, because it's been 9 years, is Bitcoin. Because what people forget is Netscape and Yahoo were founded roughly the same year as Amazon and Netflix. Okay, so there's FANG, and then there's the failed FANGs, which is Yahoo and Netscape. It took less than 7 years for both to fall to the wayside. So not that Yahoo's failed, but it's no longer dominant. And I think 9 years in crypto is like 30 years in traditional markets, which means I think Bitcoin has already proven itself.
And you mentioned in your talk earlier the correlations to existing assets, and if I recall correctly, Bitcoin had around, I think, 14 or 16% correlation to the stock market. Do you think that's going to increase? Do you think they're going to become more correlated over time or less correlated?
I think Bitcoin's going to remain uncorrelated, but I think crypto will become correlated because securitization or tokenizing traditional assets is probably going to be a very big growth area. So you may have fractional Apple, fractional oil, and I think that those securities obviously be quite correlated to public markets. But I think Bitcoin, of course, is a store of value. I mean, I think it actually makes sense that it has low correlation to the equity market.
And what's your take on the market at the moment? We've obviously seen a couple of months of pretty sideways kind of down movement. Do you think we've seen the last of this? Do you think there's going to be a recovery? And if so, what's your take on the behaviour based on previous pickups?
Well, I think that the fear people had last year was that if Bitcoin fell hard, because there were a lot of new buyers of crypto last year, that it was going to really essentially break the back of Bitcoin. And so I think the first 6 months of this year has been that story, right? Banks cut off access to using credit cards to buy crypto. Regulators like the SEC came out very hard on ICOs. We had a lot of pushback about, there've been pretty visible hacks. So I think these things really put a taint on crypto. And I think by June it was actually looking pretty negative. Since then, crypto's actually rallied, especially Bitcoin. And I think the preponderance of data now has become fairly positive, right? We have, on-chain volumes are picking up. The valuation, when we look at price to mining cost, fell to 1 times. Technicals are better. I think SEC kind of said somewhat constructive things because ETH and Bitcoin are both commodities. So I think we're emerging from that, bear market, Arctic freeze, and I think people should be a lot more optimistic about it right now.
And because you've got so much experience in this market, and you've had a lot of experience in traditional markets as well, what's your take on the economic behaviour of people in crypto? Was it sort of largely retail driven up until late last year? Have you seen a change, and do you think that that's going to change in the years to come?
Well, I think some of the definitions are a little blurry because when people in traditional equity markets, when they talk about retail, they're really talking about a non-sophisticated, non-qualified investor. But in crypto, when people talk about retail, they're really talking about anybody but a hedge fund or mutual fund. So I think family offices are quite big in crypto. A lot of portfolio managers of hedge funds actually own a lot of crypto, and and then there's a lot of Silicon Valley owners of crypto, and they're all getting lumped in as retail. So I think crypto is very tech heavy and non-traditional heavy. But I think it's a somewhat sophisticated audience. there are there are problems. I mean, there's a lot of manipulation, and as you know, there's a lot of folks who focus mainly on price. So there's a lot of what we call reflexivity. Like if the price goes up, there's more interest in buying, and as price goes down, there's less interest. That's probably not an efficient market, because normally you think buyers should exist at lower levels and sellers should exist at higher levels. But in crypto, higher prices means there's more buyers, lower prices means there's more sellers.
Yeah, and it's been fascinating to see how little effect after the end of this bear market, how little effect major developments and what would be hugely positive news late last year now seems to have literally no effect on the market. You'll see a tiny pump, and then things will just die off. Do you think, as a maturity metric, do you think the reflexivity will reduce over time?
It's hard to tell. I mean, currency markets, for instance, have a similar patterns. I think when you look at FX, at JP Morgan, we used to say basically Japanese housewives drive the FX markets, and so it really just depends on how the market evolves.
Yeah. And what I found interesting, touching on your talk this morning, was the take you were giving on wireless technology back when you were saying this was going to be huge in the future, and that people should listen to this. You obviously then had the internet as well. I'm sure you probably were on board with that as well. How analogous do you think cryptocurrencies are to those technology cycles?
It's very analogous. I think like people look at iPhones today, and we wouldn't really have internet today without mobile. Facebook wouldn't really be Facebook without mobile. And of course, so internet and mobile evolved together, but they've been hugely important to both the development of like economic growth, but a lot of the technology that we see today. But in the earliest days, in the early 90s, it was not embraced. I think people genuinely thought cell phones were going to become cordless phones. They were going to eventually be free, because everybody thought all the money was in long distance or local telephony, because those were the big businesses when wireless was small. And I think, one, it just shows you how there's this bias that the bigger companies today are seen as positioned better for the future. Because I covered wireless, these were all startup companies. Guys like Craig McCaw, John Stanton. But second, I think I just had a huge advantage, because being young at that time when I was in my 20s, I saw how important cell phones were. You didn't have to leave people messages on their answering machine for social purposes. It was just a lot easier to stay in touch. But for someone who was 50, who've always used to having, leaving messages, they didn't care about staying in touch with people. They didn't recognize the impact. And yes, in 1993, there were only 34 million cell phones globally. 34 million. Today, there's 4.6 billion. And yet in 1993, it was people weren't that excited.
And do you think that one thing I like to use a lot for my own metric and what I communicate to new people entering is I like to look at the technology adoption curve. And a lot of people are saying that cryptocurrencies adoption, because we've got mechanisms like the internet, which seem to accelerate, and we've got this available information. Do you think that the adoption of cryptocurrencies will be more rapid because of things like the internet and wireless technology than these previous techs?
Yeah, I mean, it makes sense, right? It should. I mean, I think crypto is it's a social network. It's no different than people starting to adopt, something as basic as Visa, MasterCard, or even something like Venmo and PayPal, because that's what a wallet is, right? So I think it's fair to assume that curve will be steep. It's interesting because you don't need the curve to be that steep for there to be a huge opportunity in crypto. Right? You don't need 90% of people to have a crypto wallet for crypto to be successful. You need 5%, 10%.
And you mentioned the amount of new wallets being created earlier. One thing that I see in the market at the moment is what we're lacking is usability. And I think the custodianship of crypto assets for people is perhaps a little bit hard for them to get their head around the first time. What do you think the transition is going to be like over time with fiat and third-party custodians and the move to self-custodianship?
Yeah, it's tricky because, by nature, crypto is decentralized. So one, you don't have any fractional bank system or credit mechanism. So settlement has to occur on the blockchain, and therefore, custodian or being a qualified custodian, especially for institutional, is essentially can be very difficult in that environment. Or maybe the more simpler answer is this notion of custody and level of decentralization. There may be either a layer 2 that allows some of this to be centralized, or there's financial products that allow some centralization. Like an ETF is a centralization solution, for instance, because one entity will store the coins. That entity could eventually become a bank, right? So I don't know. I guess it could. We just don't know the answer.
Do you think that decentralization is a favorable character from an investment perspective in cryptocurrencies, or do you think that it is equal to, say, the company, the idea behind, say, a utility token, for example? And that's probably a little bit hard for me to put, but some highly decentralized cryptocurrencies like Bitcoin, and then you've got companies issuing utility tokens. I guess maybe from a risk perspective, what do you think is more high risk in that regard?
I don't know. It's it's probably one of these. We're gonna probably look back and realize it's probably a social cycle that worked, because when you look at market history in traditional corporate equities, for instance, conglomerization and deconglomerization, which is vertical integration and splitting from vertical. These are all just sort of trends, partly driven by consultants. I think this idea of decentralization is a kind of a social response, because banks are so concentrated in these big tech companies, like these platform companies, Facebook, Google, Netflix, Amazon. I mean, they're great companies and great businesses, but they could be stifling innovation, right? Because how do you start a business to compete against Apple? How do you start a business to compete against Amazon? So I think sort of distributed ledgers, decentralized models are a social response to that. But in the future, maybe there's a hybrid. Maybe people want some elements of that to be centralized.
That's interesting. Coming back to what you spoke of earlier, and this is something I don't think a lot of people really consider in their research, certainly I don't, is what you mentioned on the millennial demographic. How intrinsically linked are the economics of cryptocurrencies and the previous asset classes as well, the more traditional ones, to different demographics?
We do a lot of work on demographics. I did a lot at JP Morgan. In fact, it probably gave me a big edge when I did wireless, because a lot of our thesis on wireless was that the penetration rate of a 20-year-old was going to be what wireless looked like in 30 years, whereas most people said, well, my grandmother's never going to have a cell phone. And we realized, look, when you're a grandfather, the number of people with cell phones will be very different.
Yeah.
So demographics is everything, I think, and it has explained gold's price move in the 70s, and it explained the 82 to 99 bull market was all about boomers. And this millennial generation, it's actually, I think, very different this time, because one, with social media, it's more synchronized globally. So in other words, however the U.S. millennials feel, like we know in surveys, they don't trust banks. Countless surveys, right? First Data, First Facebook. We find the same feeling globally, right? It's not like millennials in China or Asia love banks. They also hate banks. There's 2.5 billion millennials globally, and they have pretty substantial economic power. In the U.S., millennials will control the majority of disposable income by 2029, and they're going to have over $7 trillion of assets within a few years. And again, just a fraction like going into crypto would create huge upside for the crypto market.
It's exciting times. So I noticed on your slides earlier, Australia was ranked number 7 in terms of the global crypto markets. I'm not sure what metric was used.
Oh, actually, that was that slide was talking about, and it's from Forex bonuses,
Right.
the level of digitalization of money. meaning how digital is the economy. And so Australia, yes, is ranked number 7. I think Canada may have been 1 or 2.
Okay. How does the US see Australia in terms of crypto? Do they see us as quite innovative? Do they see us as a progressive country?
Well, in a way, it's hard to answer because there's not a consensus. Like if I had to say, talk to the crypto holders and crypto developers in the U.S., one, they don't have much knowledge about what's happening in Asia, or very limited. I find that even in the Telegram groups, there's generally sort of Western Telegram groups and Asian. So I think Australia, there's less awareness in general about that. But of course, anybody in Asia will tell you how there's a lot of things going on in Australia. I mean, there's a lot of ICOs, ICO advisory, a lot of great teams, there's funds. So I think it's, crypto is still suffering from the same reality that the U.S. tends to be isolated. I guess that's why the U.S. doesn't play soccer, right?
Yeah. We certainly all look to the United States, and it's funny because a lot of people say to me, there's all these other countries doing really well. Australia's doing really well in the regulation front, but nothing changes the fact that the US is a superpower. And I think even symbolically, what happens around crypto in the US has a massive effect on the global markets. So before we finish up, Tom, one last question. What advice would you have to someone looking to get into cryptocurrencies for the first time in terms of what research would you recommend they do first for them to get a good fundamental understanding and knowledge of not only what they're investing into, but the technology behind it as well?
Yeah. Well, I think they have to be prepared to spend a lot of time, because I think anyone who looks at this will find that this is sort of turning some things on its head. So unless someone is naturally believes the world is messed up, they're not necessarily going to think cryptocurrencies make a lot of sense. So I think it makes sense to be prepared to spend a lot of time getting some books. There's some good books out there. And then, if they're not a millennial, to really try to see this world through fresh eyes, because, let's think about it. If you take any innovation in any period in American history or global history, it's rare that someone who is 60 creates this product for a generation. Almost every major business created has always been created within a generation by someone in their 30s.
Yeah.
And so I think that's why if someone isn't 30, they may think these are just some wild ideas by young people, but really, at the end of the day, those are the folks who are changing the world.
Well, it's interesting. I'm 30, and just about everyone I know that's gone headfirst into crypto and left jobs is within probably 2 to 3 years of my age group, and it's fascinating. Even my demographics on YouTube are between 25 to 40. That's the majority of people.
So, that's right.
Fascinating stuff, Tom. Thank you so much for your time. Really appreciate you coming on the show. Thank you so much, and guys, hope you enjoyed. Cheers.